Interesting situation on the general stock market. A lot of red candles, but is it time to bounce from this 50-day moving average? Let's talk about that, and welcome to myfinancesteacher.org. So as you might have heard a lot, history does like to rhyme. And as you see, the recent history going back to at least April this year has shown us that buying the S&P 500, buying the general stock market, whenever it retraces this 50-day moving average, at least in the ongoing intermediate cycle, has been a very attractive buying opportunity. And what we see developing over the last week is that the S&P 500, as I've forecasted recently, has corrected down to that 50-day moving average, as we have observed some negative divergences on the RSI. Now, looking at the S&P futures before the US markets open right now, we see that the S&P futures are already a tiny little bit higher by 0.15%. So if history repeats, if the most recent history repeats, or if it at least rhymes, then perhaps over the next 1 or 2 days, there will be a very interesting buying opportunity on the general stock market, with a bit of a bounce coming up after that over the next few weeks, at least up to the upper range of the Bollinger Bands. That has been the history since early this year, since March. But that again is going to happen if the ongoing trends continue. And yes, generally investors do say that the trend is your friend, until it's not. So the most difficult question over here is to figure out, when is the history actually changing? When is the trend getting broken? So if the bull market in the general stock market is still healthy, after all, since the pandemic, the markets have already gained enormous percentages, then perhaps a buying opportunity very soon. On the other hand, if the correction is due, after all, the ongoing intermediate cycle has been going on for 193 days so far, and usually these last for around half a year. So based on the usual cycle duration, it's time for some sort of a sizable correction in the S&P 500, going noticeably below the 50-day moving average. So, is it trading as usual, or is history going to fail repeating this time? And what can we do to prepare for either of the scenarios? Well, while nobody knows the future, there are some strategies that you can implement. And I've written about all of the details over here at today's post at myfinancesteacher.org. The membership only costs you a beer or two. The first month is only $5, $10 after that. So you're more than welcome to join us. And I post each of my trades over here at Model Portfolio, which keeps all of the trades that I've ever done, making all of my trading and gains completely transparent. Let's see what the new day brings. The futures are tiny little bit down over the last couple of minutes, so let's wait for the market open, and good luck in your trades.